and it's Saturday the 14th of April. Starting with FTSE, it's got the clearest pattern. In particular, it's got this third of a third here, which is a nice clear indication of an impulsive move. The wave count is 1, 2, 1, 2, 3, 4, 5 to complete the 3 wave. Then a very irregular ABC for 4, and then 5 waves down for 5. And these are the fib retracements, so 50% is around 7328.9. I say around because I can't be exactly precise on the on the chart. Anyway, looking for a corrective move now, and we have got a clear A, B, C, B, and then a 5. That could actually be complete. I was hoping for a more distinctive B wave, and of course we have got expiry next week, so I'm not expecting too much next week in the way of declines. We could still see a B wave first, so ABC, and then a B, and then a C coming in. That's certainly very possible, and that would convince, I think, many people that we're actually going up rather than down, which is what we need. At peaks and troughs, in fact, in all market action, what the majority think is always wrong. So people are always selling at the lows and buying at the highs. That's the way the market works. It exerts this strong psychological pull at those levels, and people who aren't aware that of that pull get suckered into various moves. It happens at all different levels, all different times, but it's strongest at the major peaks and troughs. Right, this is the 30-minute chart, and we've got this is the corrective rally, so a very clear ABC there, very clear ABC here, which is actually textbook stuff at this point. We've got the conference obviously discussing this on the 30th of April, or very welcome if you want to come along. There's a link to sign up on the email. This is a bit messier, but you could say a 1, 2, maybe a 3 to there, ABC, 4, and a 5. Now it's going sideways. So next week, I said we've got expiry on Friday, so probably a fairly quiet week, maybe 2 action, but we could easily see something of a sell-off, ABC coming down, and then another rally perhaps. So it could be a little bit longer before the decline hits, but at the moment the wave pattern here is pretty clear. It does call for another leg down at least. It's just a question of how much further the market wants to go up first to dispel all the bearishness before it starts to plunge down. Right, the DAX has a very almost exact same pattern as FTSE, with 5s down to there, same wave count, so I won't go through it again. A, B, C, A, B, C, B, C, which may now be over. Again, we have a case for a B wave decline and then a rally up, so it depends what goes on. It may be worth obviously selling this in case we see a much stronger decline, but again, as it's expiry week, that may not happen because we tend to get the fast action after expiry. 66.33, had a bit of a tough time recently in this corrective action. Too much whipsawing. We really need clear action like this for that particular system to work, but once the peak is in, I think it could be an extremely valuable system to operate. S&P, different picture. You haven't got the 5th wave, only got a ABC. That's a corrective move. Another ABC up to here, a bit of a messy one. This could be impulsive, and this could certainly be. This is a very feeble correction compared to what we're seeing on the DAX. Not necessarily good news out at all. So again, we could slide away here, and it could easily break to new lows, I think. Again, I guess it's expiry week. I expect not too much to happen, but none of these rules are 100%, as we all know. Right, now this is an hourly chart of the Nasdaq Composite. This could be the most important chart I'm showing today, really, because we have got a clear 5-wave decline of this new peak, which came in on the 13th of March. 1, 2, 1, 2, third of a third, strongest. 4, 5. That's bottom wave 3, 4 and 5, followed by this really weak ABC rally, which taking out 30.2% fib, but failed to get up to 50%. So we started to fall away here. In fact, I mean that could be a complete pattern. We could be falling away. Having said that, what we could see next week here is a 5 waves down off that high, and then an ABC rally. Now that could take up all of next week. And we could then see a slide coming in after expiry in April. So that's quite a critical chart, and I would watch that quite carefully. Let's have a look in a bit more detail. Okay, well here's that secondary peak, fairly impulsive move, fairly corrective move. We've then got a 1, 2, 3, 4, 5. I think really it needs to fall away quite sharply on Monday if that's going to hold, because a bigger rally here, if we get that gets taken out, it would suggest it's just an ABC decline. So, it could be, of course, we've got so much potential bad news at the moment with missiles possibly flying away, trade wars going on, currency devaluation, etc., etc., etc. That anyway, there's certainly potentially a lot of bad news around. If that starts sliding away, then that could mean a confirmation that we have seen a major peak and that something major is coming in over the next weeks and months. Alright, gold's being a bit of a tease at the moment. It keeps suggesting it will, but ultimately it won't. We've had this spike into the resistance area, 1360, 1380. Fell back again. I think we're very close to a breakout here. I'm pretty much fully positioned. Bullion, coins, silver coins, gold coins, ETFs, spread bets, etc., etc. I mean, I will add positions as we go along, but I think it's time to be positioned in gold, silver, etc., etc. And I mean, the chart patterns are a bit messy, but we just need to break through. And if we see this slide in equities, which may not be next week, but it may well be in the next 2 or 3 weeks, I think it's probably going to benefit gold. I mean, gold tends to get going when in times of trouble, and I think times of trouble probably sums up where we are at the moment in a few areas. So I think there's good reason to be into gold and silver at the moment. Bitcoin saw a sharp rally last week. Seemed to surprise a lot of people. This isn't actually the low. We saw a low at 6,000. So that's a possible 1, 2. Now 1, 2, 3. A, B, C, 4. This needs to make new highs really. It doesn't make new highs, and it was just an ABC. If it does make new highs, and it could still be an ABC, but it would give us a little bit more encouragement that we have seen something of some importance. So I still have an open mind here. I think this is encouraging. What was particularly encouraging is that the prices have been maintained. If this was a flash pump, I think somebody called it, then it would probably been dumped by now, I would have thought. But in fact, prices continue to go ahead, and that is a positive in my view. So I say open mind at the moment, but it's better than it was last week. Alright, finally look at Ethereum. ABC, that's pretty clear. A B wave, and a 5-part C wave. So that could well be over, I think. Interestingly, all these ICOs are affecting Bitcoin and Ethereum. People buy Bitcoin and Ethereum to send to the ICOs. The ICOs don't want to realize the cash, so they sell it again. So this whole thing could have been a big ICO bubble, as it were, that came in last part of last year, raised lots of money, and then started selling all that Ethereum and Bitcoin to get at what they wanted. Plus, it's also note that although virtually all altcoins are also up at the moment, they're all priced in Bitcoin or Ethereum. So all that's happened is that the value of Bitcoin's gone up. There's not necessarily any and Ethereum. Not necessarily been any buying on the various altcoins. So, but having said that, we have got the beginnings of a decent rally here also, which we'll look at in more detail. So basically, from the low here, we have a 1, 2, 3. So what we need is to see a 5 come in. That would be encouraging, and suggest that we're going to motor on up from here. But obviously a correction would be due first, having seen a 5th wave up. Anyway, there's a lot happening, interesting times. Nasdaq comp definitely worth watching. That's the clearest chart as regards what might happen next. Very clear 5 waves down, ABC bounce. That's a classic formation I look for. FTSE has something similar, but a bit more complicated and suggesting a bit more upside in any case. And of course, it's expiry week. But as I say, expiry week isn't everything. Anyway, on that note, I'll call it a day. If you found that interesting, useful, back to the report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.